What's up traders? In this video, I will be performing a market forecast on EUR/USD. So stay tuned. Now, this video is going to serve as my outlook for EUR/USD for the month of November 2024. It is also my intention with this video to show you guys how I determine and establish a directional bias in order to help inform which areas to buy in and which areas to sell in. As always, I'm going to be focusing on the weekly, daily, and 4-hour timeframes in order to give you guys a medium to longer term view of what I'm anticipating to happen next on this pair. And we're going to start off with the weekly time frame. Now, our weekly time frame is obviously bearish. We are trading within this bearish weekly range, and the current overall objective for price action as it relates to this weekly structural range is a violation of this weekly week low down here. Now, our weekly pullback phase is essentially taking place. However, ever since the start of January 2023, price action has essentially been consolidating in this area around the EQ of our structural range. Now, at the moment, you'll notice that my internal structure is currently pointing bullish, with this being my most recent bullish weekly internal range, and this being my most recent bullish internal breaker structure. However, I established this bullish internal range by applying the FTC model to this internal lower high here. This essentially means that after this internal bearish breaker structure, my internal structure was bearish. We had this internal pullback which came in to mitigate weekly supply, but then price action failed to create a new internal lower low, and what we saw instead was price action violating this lower high which failed to create the lower low, and that is where I applied the FTC. However, an alternative way in which you could map your internal structure here would be keeping this large original bearish internal range. And then you would effectively have a scenario where price action is now just consolidating within that internal range. Your internal would be bearish, and the anticipation would be for price action to violate this internal week low. Both ways of mapping your internal structure are correct. The only difference with mapping your internal structure like I have in here, having applied the FTC model, is that you would now be following price action a little bit closer, and therefore you would now have a bullish internal range where the anticipation would be a violation of this internal week high. So focusing in on this bullish internal range, we can see that our price action has come in to mitigate this weekly demand zone, which is well priced within our internal range, and we'll look at that in a minute when we drop down to our daily time frame. As we are interacting with this weekly demand now, we could potentially see a resumption of our internal bullishness originate from this area in order to target our internal week high. If we do see a violation of this internal week high, then we would be getting effectively a resumption of our weekly pullback phase because we are currently consolidating in this area. And then the next buy target after price action violates this week high would be this weekly supply zone that sits up here. Now, this would be a very nice weekly supply zone where we could see price action coming into, mitigating before potentially we see our continuation phase originate from here. And the reason I say that is because it is a well-priced POI that still has a little bit of imbalance left over, and that has this liquidity pool that sits just below it as well. Another thing that could happen in this area though, particularly because of the introduction of this strong bearish pressure this past week, is we could just see a very short-term bullish reaction coming out of this weekly demand zone before that bearishness continues to violate our internal strong low down here, which would then signal the potential start of our bearish continuation phase. Because remember, our weekly time frame is currently bearish overall, and the anticipation is for price action to violate this weekly week low. That would also tie into the alternative way in which you could map your internal structure, where keeping this original bearish internal range would see price action looking to violate this internal week low. So the overall directional bias for our weekly time frame is bearish, but then depending on how you have your internal structure marked out, you are either looking at continued bullishness to target this week high, or you're looking for continued bearishness to violate this week low. And so if we now drop down to our daily time frame, which is the internal of our weekly time frame, we can see that we are currently bullish. We have our bullish daily range. We have our daily pullback, which has come in to mitigate this weekly demand zone. And so now the anticipation for this time frame is going to be a violation of this daily week high, which could potentially originate from this weekly demand zone, as we have discussed. And then obviously a violation of our daily strong low here is going to signal the potential start of our weekly bearish continuation phase. So because of the relationship that exists between internal and external structure, as price action is now interacting with this weekly demand zone, we know that the start of our bullish daily continuation phase will only truly be confirmed by our internal structure shifting from a bearish market state to a bullish market state. However, you'll notice that my last bearish internal break of structure is all the way up here, and I do not have a bearish internal break of structure marked in here. And the simple reason for this is because I do not view this as a bearish internal break of structure. Now, this is going to make a lot more sense when we drop down to the 4-hour time frame, which is the internal of my daily time frame. But the reason why I did not establish this as a bearish internal range is because of the fact that my 40 to 50% retracement rule was not satisfied before we saw this resumption of bearish pressure. Now, I do have an exclusive video up on my Patreon explaining exactly what this 40 to 50% retracement rule is, how you apply it, and why it can be beneficial to have in your arsenal. But essentially what happened in this area was that my 40 to 50% retracement rule was not satisfied. This meant that I did not have a bearish 4-hour internal range established, and therefore I do not view this as a new bearish internal break of structure. So as it stands, I have yet to establish a new bearish internal range. Now, I do understand if that may sound a bit too complicated or too confusing, but what I will say is that price delivery is not always going to be the same. You are going to be faced with periods of sharp bullish or bearish pressure that enters the market that rapidly pushes price in a particular direction in just that one candle. Or you'll be faced with periods like this, where price action is essentially just trickling in one direction almost infinitely. And when these periods occur, it can be very tricky to distinguish between what is a major break of structure and what is a minor break of structure. And so even though that may sound confusing, it is based off of a rules-based approach. However, if you interpret this as a new bearish internal break of structure, then there's absolutely nothing wrong either. As long as you are able to consistently mark out your structure, you're totally fine. If you have this as a bearish internal break, you would be effectively looking for your internal structure to switch bullish up here in order to signal the end of your pullback phase and the potential start of your continuation phase. And after this break of structure to the upside, you would then be looking for an internal pullback. You'd be looking to see if you have a well-priced demand zone in here, from which you can then look to potentially get involved in a buy trade to target initially your internal week high, but then ultimately your daily week high all the way in here. You'll notice that I have this daily supply marked out. Depending on price delivery, as we come out of this demand zone, we could see price coming in to interact with this daily supply before a resumption of that underlying bearishness that we spoke about on the weekly time frame. This daily supply zone could potentially facilitate the violation of our daily strong low. That's going to largely depend on how price action interacts with weekly demand going into this new week. Alternatively, this daily supply could just generate a small short-term bullish reaction before this underlying bullishness continues. So going into this new week, as we're interacting with this weekly demand zone, I would say that this daily supply is going to be our next immediate potential buy target. And if we now drop down to our 4-hour time frame, which is the internal of my daily structure, you'll see that my last bearish 4-hour break of structure is located here. I do have my 4-hour strong high marked out, as that is the starting point of the impulsive phase which generated my break. And now the reason why I do not view this as a 4-hour break of structure, but rather a 4-hour internal break of structure, is because of this price delivery in here. The point at which my 4-hour internal structure shifts from bullish to bearish is this point in here. You could actually also mark out your last bearish internal break of structure here by applying the FTC model to this initial bullish range, as we had an internal pullback and then price action failed to create a new internal higher high, instead rolling over to violate this low. So the point at which my internal structure shifts from bullish to bearish is this point here. And once that internal structure shifted bearish, all of this price delivery that we have in here, I view as an internal impulsive phase, which helped facilitate this bearish internal break of structure. And if we focus in on the microstructure that is helping facilitate this internal impulse, you'll notice that that microstructure remains bearish all the way down to this point in here. And after this new micro lower low was created, we see price action then switching from a bearish market state to a bullish market state. And so this pullback phase that we have here, I then view as the 4-hour internal pullback. This means that this was my starting point of the internal pullback, which made this my 4-hour internal week low. And once price action rolled over to violate that point, we then had a new bearish 4-hour internal break of structure, which means that we are effectively still seeing bearish 4-hour internal price action, which is facilitating this 4-hour impulsive phase. Now, the interesting thing with the price delivery that we see in this area is you have very clearly defined microstructure that is facilitating the internal pullback, but then we just have an immediate drop and then price action pulls back. And this is where the 40 to 50% retracement rule can be very beneficial, because by applying the 40 to 50% retracement rule, I am now able to define a new 4-hour internal range, even though during this drop in price, which generated my new bearish internal break, there is no clearly defined microstructure here that is helping facilitate the impulse. And so therefore, it's very difficult to spot the point at which our impulsive phase ends and our pullback phase begins, which is why I have defined a new internal range here by using that 40 to 50% retracement rule. This daily POI is the next potential buy target for the internal pullback. And as we said, either we can see a resumption of our underlying bearishness originate from this area, or we could see a short-term bearish reaction before price action continues to trade higher. So for me personally, if I am to take a buy trade, which is anchored to the mitigation of this weekly demand zone, what I would do is wait for my internal structure to shift bullish first, and then look to get involved in a potential demand zone on that internal pullback, because this would allow me to trade based off of the mitigation of this weekly demand. Not only that, but by waiting for my 4-hour internal to shift bullish, what I would also be doing is I would be trading in line with this bullish daily range that price action is currently trading within, looking to target that daily week high. If, however, we see a breakdown of this weekly demand zone and a violation of this daily strong low, then I would start looking for sell opportunities to trade in line with that overall weekly bias, which is bearish, that is gonna look to target this week low. So price action is definitely interacting with a key weekly demand zone right now. There has been an initial bullish reaction to this weekly demand, which is denoted by this weekly inside bar candle. It's just now going to be interesting to see whether or not that bullishness continues, or whether price action rolls over to violate our daily strong low. So I'll definitely be keeping an eye on EUR/USD here for the remainder of 2024, as I do think there is going to be some interesting price movement between now and the end of the year. And I do think that that has been amplified by the results of the 2024 US elections. Definitely feel free to perform your own analysis as well, because by no means is my technical analysis the only way in which this pair can be viewed? As always, I appreciate you guys so much for watching, and I'll speak to you in the next one.